Now, in U.S., stock index futures are pointing to a flat open as traders eyed several pieces of data and President Donald Trump's meeting with UK Prime Minister Theresa May. Our traders will be keeping a close watch on Trump's meeting with May and any comments that they make on a potential trade deal and Brexit. Durable goods and GDP data are both due at 8:30 a.m. Eastern Time, with consumer sentiment set to come out of at 10 a.m. Eastern Time. On the earnings front, Abivir, Chevron, Colgate, Palmolive, American Airlines Group and General Dynamics are among companies set to report before the bell. And now, yesterday we saw the Dow is on a 3-day win streak and closed at another all-time high. That was on Thursday at 20,100 points. Now, joining me now is VOA Channel's TV business correspondent in New York City, Jill Maladrino, to look at those figures there. Thank you very much for joining us, Jill.
Good morning. So we know the market is still enjoying what we call the Trump bump rally, but is that the only reason why the major averages have hit all-time highs this week? As it stands right now, U.S. markets are responding well to President Trump's first week in office because of his pro-business stance, lower taxes, and getting Americans back to work with his proposed spending plans. And that's why we're seeing strong support in this market. In the near term, dips will most likely be met with buying as the market consolidates into a range. Longer term, the test is going to be how Trump's trade policies actually play out and impact corporate earnings, which is why we've seen forward guidance fairly muted. In addition to the pro-business sentiment Trump has established, crude oil prices are rebounding, which is helping the energy sector. Earnings seem to have troughed, particularly in the cyclical tech sector with stocks like IBM and Microsoft. I also think it's important to point out that economic data is solidly rebounding, although housing numbers were a bit soft yesterday.
Now, Jill, despite the enormous run-up in the market, what sectors are U.S. traders and perhaps investors most bullish on?
Well, the one sector that stands out the most to me is the financials. So there's 3 catalysts that could move profitability meaningfully higher over the next 2 to 3 years. The first one, you're seeing continued increase in short-term interest rates and a steeper yield curve. We expect larger banking M&A and finally significantly higher returns of excess capital. Traders are also bullish on materials. That makes sense as Trump has signed executive orders on further building out the pipelines, and he's aggressive generally when it comes to infrastructure build. Let's compare it to Nigerian company Dangote. It's a multinational, publicly traded cement manufacturer. You guys talk about this company a lot. During the oil boom in 2014, massive revenue was coming into government balance sheets. Infrastructure spend was super strong. As a result, the company benefited and the stock reached all-time highs in 2014.
Right, the trading week wraps up today. What's on tap for next week?
Well, besides earnings, all eyes will be on the Federal Reserve and Janet Yellen for the first FOMC meeting of 2017 on Tuesday and Wednesday. Federal funds futures, it's a tool that we use to predict market expectations for changes in monetary policy. It only shows about a 3% chance that we'll get a rate hike this meeting. Now, by March, the odds go up to about 20% and 37% by the May policy meeting. Asset prices have been supported by ultra-easy monetary policy since 2008, so we will certainly be talking about this hot topic over the next several months.
Now, Jill, just before I let you go, we can see the stocks are really eyeing Trump's meeting with UK Prime Minister. What are the investors expecting to get from this meeting?
I think there's high expectations for this meeting because prior administrations, they wanted to work more on a globalization type of format. Trump wants to deal directly and have direct trade agreements with the UK. It echoes a lot of what UK citizens are saying about Brexit. They want direct trade agreements. They don't want to be married to globalized agreements that they don't have direct say in. So I think it'll be interesting to see how protectionist these type of agreements are and to see if we do get unilateral agreements with the UK. If in fact Trump can accomplish that, I think that's when we'll start to see unilateral agreements with multiple countries. And we're seeing the beginning of that with the repeal of the TPP. So I think we're going to look at more unilateral type trade agreements. So it's going to be a much different type of 4 years if in fact he can establish that.
Well, we'll keep watching as well as the investors. Thank you very much, Jill. Enjoy your day and have a beautiful weekend.